Hi, welcome back to Vietnam Real Estate Insights, the program that looks at the Vietnam real estate market and the emerging trends with industry leaders. I'm your host, Harlow Russell. With us in today's conversation is Marc Townsend, the Managing Director of CBRE Vietnam. And we'll be discussing about the opportunities and challenges of investing your money in the Vietnam property market. Marc, welcome.
Thank you.
Thanks for joining us. Thanks for your time today.
My pleasure.
Great. Well, a little bit of your background for our audience. You are an industry veteran. You've been in Asia 27 years and 12 years in property sales and marketing and investment sales in Southeast Asia and 13 years in Vietnam. I think you've seen it all. You are a professional member of the Royal Institution of Chartered Surveyors, and very interesting, you started your career as an officer in the Royal Marines, and you have 5 daughters. Hats off to you.
Thank you.
Very good. Well, to start off, from your perspective at CBRE, what's happened in 2015 so far? We're almost at the end of the year. It's been a very interesting year, particularly in residential. Tell us about it. What's your summary for foreign investors?
Well, I think it's been a turnaround year. Obviously, we've slayed the dragon of inflation, interest rates, a weak currency. We've seen confidence come back to the market, particularly in the residential market. We've seen the Trans-Pacific Partnership being agreed. Obviously, it's now we're in this difficult period of probably a year, whilst the parliaments and senates and congresses around the world look at it and hopefully agree, because obviously Vietnam could be a real beneficiary, particularly not just in the apparel and footwear that we've been so used to the last 20 years, but also IT and handphones and a whole area of other things that could really change the way people look at Vietnam, particularly the Taiwanese and Koreans, Japanese, who have been such good friends to Vietnam in the last 10 years. We've seen for the first time pre-commitment in office buildings. I've just come from a building that was finished at the middle of this year, and already it's fully committed. That hasn't happened for 7 or 8 years. The growth in construction and development is right across the country. It's not just Ho Chi Minh and Hanoi. It's Da Nang, it's Phu Quoc, it's Can Tho, it's in Sapa, it's in Vinh, it's in Haiphong, Ha Long Bay. We've got some infrastructure being built just outside the window, just looking at the metro system, which is being built, the first metro line. So it's a combination of about 6 or 7 things. Foreign ownership is interesting. I don't think it's the turnaround thing, but it's certainly for the first time allowed you and me to have the same rights as our Vietnamese colleagues and investors, that we can own, buy, sell, bequeath, gift, rent out, trade, residential condominiums, and to a certain extent the villas and townhouses as well. There's obviously caps and collars on that, but it's a pretty interesting piece of legislation that probably puts Vietnam as a more interesting investment opportunity than Indonesia, Thailand, Philippines, Malaysia. So that's good. So as I said, it's infrastructure, it's the regulation, it's funding, it's the currency. I tell my Singaporean colleagues every time they come to Vietnam to hold on to their dong, because it's actually losing less value than the Singapore dollar this year. When you go to Singapore now, you can actually sell your dong at a currency exchange in the foyer of the airport. Before, dong outside Vietnam was untradeable. You just had to put it in an envelope and make sure you go back to Vietnam at some point. So a whole series of turnaround things. But most of them are psychological. Again, 5 years ago, I'd go to attend a CBRE Vietnam event in Hong Kong or Singapore, and people would be very polite to me. Now they actually want to engage with me and find out what's going on and what's changed. People are genuinely interested in what's happening. So a landmark year. In fact, I don't want it to finish.
Well, going into the piece about the law changing to allow foreigners like ourselves and others to invest, let's focus on that a moment. The law changed in July. It's now a few months later. What's happened? What's the reality of that now that we're 4, 5, 6 months out from this significant change?
Well, at the time, and when it first came out, it was a piece of legislation that came on the back end of really what was a 5-year pilot program. So as a foreign invested company, as a foreign investor myself, I could and I did actually own property for my own use that I bought. The documentation was easy to read. It was all in English. I paid in dollars. I actually traded the apartment before the rules changed back again, but I did own property. So it wasn't actually ever very difficult. It's just that you could only buy if you had the light blue residency visa or occupant work permit, effectively. But now, obviously, things have changed, and anyone that can get a visa, you don't even need to have a visa in your passport. So, for instance, we were at CBRE, was in Singapore a few weeks ago, and we were selling on behalf of a Keppel land project called Estella Heights in Singapore, and because they were Singaporeans and Malaysians buying, they, because of ASEAN, and they were able to get, they knew they could get a visa. Many of them had travelled here before, they'd owned a business here, they'd owned property here, but people were really showing interest in Vietnam, and because of the expected yield of maybe 5.5% to 7.5%, because the price was the same price as a Honda Accord with a full tank of petrol and insurance for 1 year. It was a very, very good, perceived as a very good deal. Singaporeans, Hong Kong Chinese are serial investors around Asia and have been buying property in Melbourne, Sydney, Niseko, Tokyo, London, New York, Iskandar, KL, for the last 20 years, and they feel very comfortable now that the rules have changed, that they can add Vietnam to their portfolio. So what's changed? It's probably being talked about, it's being written about, it's being discussed. Credible developers are moving back to Singapore and saying, Capital Land, Keppel, this is a project that we've done. Our sales are extremely good in Vietnam, but because we're Singaporean, we would like to be able to offer a few units back into the home market, which is a nice give back. And obviously these units have been, I don't want to use sort of sales, but they were snapped up. I mean, in a weekend, the sales were extremely good. And the feeling, it was one of the most sanguine moments of my 13 years in Vietnam, because, we hadn't seen a situation where, the acceptability of the product that we were selling or leasing, in this case selling, had been so good. And it really, I'd been saying to my friends, you really should be buying in this market probably about 3 years ago. And they were going, no. But because of this piece of legislation, they now feel comfortable. And as a result, needless to say, prices are rising. Expectations are going through the ceiling. How long will this last? All those questions that we can talk about later. But Vietnam is an emerging market. It's a big country with a big population, but of course it will have issues, whether it's inflation or interest rates again, or a weakened dong. But for the moment, we're in a very good place.
Well, you've touched on a lot of different things there. Let's talk about the concern that there could be another bubble, which has happened here a couple of times over the past few years. Things are coming back, lots of positives. When there's lots of positives, some people get very cautious. So do you feel that the growth in the market here is sustainable, or is it possible that we're seeing the beginning of yet another bubble in Vietnamese property?
Well, I think there's a couple of things that are different this time, but are they enough to make it completely different? Well, the first things that I'd mention were that in 2007 and 8, the average size unit that a Singaporean, Malaysian, Korean, Japanese, Vietnamese developer was developing was about 95 to 120, 130 square meters. And now most of them are starting at 50, 60, 70 square meters, so much, much smaller, nearly half the size. And they were forced to do that because there was a rule regarding density and the minimum number of units you could produce or develop. And that rule seems to have been lifted, and developers are now able to offer a starter unit at half the quantum amount that they previously had to do. The second thing that's important and hugely relevant in any market, particularly in a mature market, is that there was really no home loan and mortgage capability. And now the banks are falling over themselves, and every bank, every lift you go into, every newspaper you look at, every TV channel that you view, you'll see that newspapers now actively promoting retail banking, and particularly for home loans, car loans, debit cards, credit cards. But particularly it's interesting to me is the home loan. So before you were lucky to get a 5 to 8 year mortgage. Now you can get 20, in some cases 25. The loan to value was 50%, and now it's 75 to as much as 90%, and you're able to, for the first 6 months, 9 months, a year, fix the rate at, in some cases, as low as 7%. So this is a huge difference to many young couples who are buying property for the first time, and we think that those two things are game changers. However, every developer and wannabe developer has been able to get access to funding to buy land or for a construction loan, and for sure from 3 or 4, probably 5 years, when the average number of launches and supply was probably less than 5,000 units a year. It's jumped up to 10,000 and now 15,000, and this year it'll probably be 25,000. Wow. But if you bear in mind that in a good year or a bad year in Bangkok or Manila, Jakarta, KL, figures could be anywhere from 30,000 to 80,000 in the primary, in the original developer market, as opposed to the resale market. So Vietnam's got a long way to catch up. Is it too much too soon? Well, I think when you start to see speculators accumulating their second, third, fourth, fifth unit of the year, then obviously you get worried because interest rates are, I'm not saying they're an all-time low, but they're certainly very, very close to their 15-year low, and I can only speak for 13 years because I've only been here 13 years, but they're as low as they've been in my memory. And of course there's a million kids come onto the job market every year. Just in my own company, when we started, no one could ever dream of owning their own home. Now probably the older, more experienced, longer serving members of my team all own their own home. They're onto their first car. They're beginning to send their kids to international schools. When we've got some kids over in the States and Canada, New Zealand, Australia, Finland at university now. So the whole pyramid of what the middle class means is expanded. And I think that one of the first rites of passage, maybe for you and me, back in the 70s, was a car. Yes. Here it's probably more likely to be a home in one form or another.
Well, let's dig into some of those points. Mortgages, you mentioned, and it's come into an industry, it's available, but this is also for Vietnamese consumers. If we're looking at the standpoint of a foreign investor, I believe the situation is quite different. Is there opportunity for a foreign investor to get a mortgage loan to buy something here in Vietnam?
I'm sure that the technical answer is yes, but if you and I were to borrow onshore because we were working here, it would the tenor would be coterminous with our work permit. So for me, it would be about 1.5 years. So that's pretty meaningless in reality. However, if I was to speak to my bank and say I've got 3 buildings that I own in Tokyo or 2 apartments in Chelsea and London, I could pledge those assets and I could borrow down on those assets. However, I would imagine it would take a few months to do that. So in reality, for foreigners, this is a cash buy. Okay. So that's why we've been concentrating our attention on Singapore and in Hong Kong, where the arbitrage between a Hong Kong or Singapore property in Vietnam is so big that they consider it to be cheap.
Mark, we were speaking about the different segments of the market from a perspective of a foreign investor, first-time home buyer market, mid-range, middle-class market, and premium luxury market, and some distinctions perhaps related to those segments for a foreign investor to consider.
I think that foreigners are looking for yield, as I mentioned, and so that is the prerequisite to that is leasability, is the rental budget that's currently in the market or available to expatriates that are working in country. Foreigners are an expensive item, often because they require education for their kids and insurance and medical and travel and flights, and residential budgets have been hit like everything else in the last 7 or 8 years.
Yes.
I think that the portfolio that we've been recommending is luxury and premium smaller units, often 1 or 2 bedroom units. When we were in Singapore the other day, the Singaporean buyers were buying 1 and then 2 bedroom units. And when all the 1 bedroom units had been sold, they bought 2 bedroom units. And when the 2 bedroom units had been sold, they bought 3 bedroom units. And the rationale behind that was obviously, a 1 bedroom unit was very, very, very comfortable for a bachelor or a young couple, and a 2 bedroom unit was also gave an extra spare room if there was a young child or a visitor or a study. So it was typically from the bottom up. It wasn't necessarily the penthouses.
Mm-hmm.
I think what we found onshore is, for instance, we're working with Song Kim Land and Hong Kong Land on a project called Nassim, and we've been finding that the 3 and 4 bedroom units are more popular because they're being sold to end users, so to foreigners that want to occupy themselves. Yeah. So it really depends. If you're looking for yield, we're recommending 1 and 2 bedroom units, or 1.5 bedroom units.
Yes.
And there's a ready market of teachers, young technicians, quality control guys, finance. I think many companies cleared out their foreign staff after 2008, and it was just a general cut,
Yes.
dribble,
Yes.
or trickle, I should say, of new people coming in. But now all that's changed. If you go to, to a Japanese restaurant at 7:30 on Lei Tanton, you'll find loads of Japanese guys coming from their factories, still in their uniform, still in their work outfit, and all looking for places in District 1
Right.
or District 2 if they have a family.
Well, let's dig into the yield question, which is, of course, very interesting and important to a foreign investor looking at this market versus others. Let's talk about property management. In a country like Vietnam, major cities, Ho Chi Minh, Hanoi, possibly Da Nang, you're looking to buy a property that you can perhaps rent out to a foreign couple, as you mentioned, and get a yield 5, 6, 7%. But how does property management work here versus other countries where it's pretty easy to find property management or do a remote ownership of a rental property? Same thing here, more difficult, easier? How would you describe that to the potential investor looking to buy rental property here?
Well, there's a ready pool of agents and brokers that will find you a tenant. The last property that we bought, we actually bought it because the broker we were working with had a tenant and that didn't have an apartment for them. So we quickly worked out that the yield was about 6.75, and that from day one. And this particular tenant came with her own curtains, her own TV, her own toaster, and her own drying machine. So it was a decision that was made relatively on the spur of the moment, and the minute that we got the keys, we were able to give them to the tenant in the car park downstairs. So, I mean, that was the perfect scenario, and
Sure.
as I'm not particularly good at hanging pictures or fixing curtain rails, it was a gift from heaven. Vietnam is a great place for brokers and agents like that. They may not be CBRE brokers and agents, but the brokerage community is very effective. And a week doesn't go by when a broker doesn't ring up my wife or myself and say, do you have any spare units for lease? Because we have a Japanese couple or a Korean couple that are looking for something. So once they know you, that you've got a portfolio, they're very active. Now, some people may find that annoying, but actually I quite like to be called up, at least have a discussion on availability of the apartments. Secondly, once you've got a handyman or a fixer, you know, these guys can be very loyal. They've got a box of tricks. I believe they're called tools and hammers and nails and things, and they're very good, and they fix things. We probably come from a throwaway society at the moment, but in Vietnam, you know, there are people that fix things and hang curtain rails and fix air conditioners. So there's that subculture. Obviously, it takes a little bit of time to get connected. And there's obviously the property manager, the groups like CBRE that manage condominiums and can put you in touch with these people and obviously keep the common areas and help you get the electricity fixed up and the water bill paid and the internet and the telephone. And very often, on a Saturday morning or on a Sunday, if you go to the ground floor of a big condominium, you'll find that there's 5 little tables set aside for EVN, for SCTV, and they sit there all day, and you pay often in cash your telephone bill or your internet bill or your cable TV bill. So that doesn't happen in many other countries. You probably do it all online, but you know, it's different. It's not what everybody is expecting, but it does work, and I think that it's probably not the answer you were expecting. But you know, things do happen here. It's the same with paying taxes. You know, the tax department has got to realise that if Harlow Russell and Marc Townsend can buy, and we can prove to them that we own, and we have a tenant, and we've notarized the contract and the lease, and we've got rental income coming in, we want to pay tax on that, and they better have a process that we can fill out. Online or that we print out, and we turn up and we pay our taxes. And that's part of being a good citizen, and part of, you know, a foreign investor wants to know that he doesn't, you know, he can not contract his way out of paying tax. He knows that he's got to do it, because you won't be able to get the money out again if you've made a profit or if you sell, if you haven't paid your tax.
Well, let's talk about some of the gotchas about investing in Vietnam. Particularly again from the standpoint of I'm a foreign investor, I have many choices, there's many opportunities to buy investment residential property all over the world. And obviously Vietnam has a lot of opportunities and growth, etc. But what are some of the gotchas that if you're advising a foreign investor, particularly a retail investor, that they really need to be aware of so that they know what they're getting into here? What would be some of those challenges or gotchas about investing in residential property here?
Well, if people promise you a double-digit yield, I'd be a little bit circumspect. I think it's very important to turn up to an inspection with your tape measure, because I think very often people tell you that it's going to be 70 square meters when it's actually 62 or 63 square meters. So just simple things like measuring, obviously reading the contract, notarizing the contract, making sure that you bring money in through an onshore bank account, which you can open now with one of the international banks, and then making sure that any funding to pay for the development, to pay for the stage payments, goes through that bank account, and you don't just TT it directly to the developer.
I see.
You need to make sure it comes onshore first, because then and then any rental income that you collect needs to come back through that, to be paid into that onshore bank account.
So you really have to pay attention to the cash flow of how you're funding the investment, as well as receiving funds and also paying your taxes here.
Yeah, absolutely. Obviously, try and establish a relationship with somebody in the developer's office so that you know when the next payments are going to be. You've got them in, you've diarized them. You are aware, because you don't want to be told that you'll lose the unit if you don't pay something tomorrow and you didn't know that there was a due date. Asking for photographs of the development, or asking to be put online so that you know it's going. Some developers will obviously give you a ticket to come and look at the project if you buy. I think the days of giving you a ticket before you buy are probably over. I think the developers feel confident now that they don't need to do that. Starting to talk about the handover condition, knowing what you need to buy. Do you need to buy a fridge? There's a load of great stores in Vietnam where you can go in one day buy flat screen TVs, washing machine, yes, cooker, rice cooker, pop-up toaster, microwave. Just knowing where you can do that, getting it organized, making sure there's money in your bank account, having a lease contract ready that you're comfortable with, having the name of a local law firm to help you there, talking to the brokers to make sure that you've got the asking rent ready and it's sort of benchmarked.
Well, that's an interesting point in terms of gotchas, because Vietnam is a developing country. Information can be difficult to obtain, particularly in real estate. The sources of information can be challenging. How, as a foreign investor, whether you're looking at primary property, new developments, or secondary properties, a landed villa that's on the market, how do you know the price you're paying here is a realistic price, is a market price, or under the market price, or over the market price? How do you figure that out in a country like Vietnam?
Well, I think, first of all, if it's too good to be true, it's too good to be true.
Okay, all right.
We're well off the bottom now, so it's, there should be, most brokers and agents can give you the story of what's happened so far this year, the launch price, what the last sales were, when the last price rise was. Most developers, even if you're acting with an intermediary such as a CBRE, are very, very happy to take you to meet the developer, to ask for those prices, to see where the last price was. Is there most people hate being told, if you don't buy today, the price is going to go up tomorrow. If that's going to happen, you just walk away. Sometimes developers will give you a special discount for that weekend, which is obviously can save you $3 or $4, maybe $10,000. But don't buy because of that. Buy because it's the right place, it's the right budget for you. For many people, this is a cash purchase. As I said, there's no mortgage, and it's probably a 2-year stage payment. So you've got to be able to make sure that you feel very comfortable with that. At the moment, the market's going one way; it's going up, but it doesn't last forever, as we've discussed.
Yes.
There's things that can derail the market. One would be inflation, like last time. A run on the currencies, what happened last time as well. We went from 15,000 dong to the dollar to now 22. These were big swings, and other asset classes in Vietnam often get in the way, such as the gold price. When interest rates went up when the deposit rate went up to 16%, the land prices fell quite dramatically because money was being sucked out of the property market, and you could get 16% on your dong. These are things that at some time will come back. Unfortunately, history has an amazing ability to repeat itself. So I think these are the things you've got to be careful of. You've got to have I call it a dashboard of things. You've got to look at how many units are coming onto the market, what the take-up rate was. If you find that a developer just up the road had a really, really bad time at a launch, then you've got to feel a little bit worried. Was it because the developer was asking too much, because the units were too big, because there were no facilities and amenities, because they put in 2 lifts when they should have put in 20? These are things, there are projects being built now with 45 units per floor.
Wow.
And obviously these are much smaller units. They're very, very exciting to a young couple that has $20,000, $30,000, $40,000. But if you're an investor, that's an awful lot of supply, an awful lot of competitors for your unit to lease out. So these are things that you've really got to be aware of.
Well, there's a lot of considerations. So it sounds like overall, in summary, you're cautiously optimistic. Things have changed and are growing, but likewise, you've mentioned a lot of considerations and details that a foreign investor really needs to do his or her homework to make a good choice. So that concludes our interview with Marc Townsend, our conversation today, the Managing Director of CBRE Vietnam. Marc, thank you so much for your time and your expertise. A lot of information there. We hope that you have gained valuable insight into the Vietnamese property market today with our guest, and that you will be coming back for more on our regular series. I'm Harlow Russell. Thanks and take care.